I think right now, rather than immediately aggressively buying the dip, we need to wait for some more macro confirmation that either a cycle low is in.
What's up, everybody? It's LG Doucette here, and welcome to the Milk Road Show, the daily crypto show where Bitcoin doesn't just humble investors, it schedules annual performance reviews. Today is December 1st. And Bitcoin is dipping real hard. Listen, last night I went to bed, it was like 91K. I was like, everything is good. But now it's 84 and change. I don't know what the hell's going on, but I've got Matt Crosby back on the show from Bitcoin Magazine TV. He's our macro analyst, our market cycle whisperer, and he's our chart-driven truth teller who joined us just a couple weeks ago to make a very strong bull case for Bitcoin. But since then, the market has changed. And I want to ask Matt, what changed for him? Because he also released a video titled The Bitcoin Bear Market just days after we did our last episode. So what the hell, Matt? I need to know what your thinking is. But before we get to all that, today is your last chance. Take advantage of our Black Friday offer. If you thought crypto was on sale, you ain't seen nothing yet, because Milk Road has an even better sale, if you can believe it. It ends tonight at midnight. And in case you missed it, we're giving 40% off our Pro All Access membership. So that's Crypto Pro, Macro Pro, and soon to come AI Pro, all that juicy insight, the AMAs, the reports, the direct chat with our analysts in Discord, which is very important right now. I think you want to ask these guys, our macro guys, direct questions of what the hell's going on with yen, all that stuff. That is the place to do it. That will answer you in real time. So make sure you get in there, 40% off, All Access Pro. And today's episode is brought to you by Blocktrust IRA. Let AI outsmart the market and grow your crypto while you sleep. Reserve DTFs, get exposure to the entire crypto market in a single token. And Chainlink, break the interoperability barrier and power the future of tokenized finance. Here he is, Matt Crosby. Dude, welcome back to the show.
Hey, well, it's a pleasure to be back. Although I will say, immediately, you've thrown me under the bus as the first line once again. Immediately come in, talk about all my wrong predictions and everything. But yeah, of course, it's not been a great few weeks. I think one thing that really helps investors, which of course, being macro bullish and very long time optimistic on the price appreciation of Bitcoin, it's hard to flip from bullish to bearish on a whim, but at times you've got to do it. So I think we can cover a lot of data today. Of course, I still remain long-term bullish, but at the minute, as you said, things aren't looking quite as hot as we'd like them to be.
Listen, I don't mean to throw you under the bus like that, man. This is only my second show with you, so the other predictions weren't done under my watch. Okay, so it's not my fault. But no, listen. I think as an analyst, I think your analysis last time was spot on, and things change. And I think the most important part, which is something that you're preaching here today, and I think everybody needs to realize that it's okay to change your opinion. You know what I mean? This is super volatile, and that's what we're here to do today. And I think people are really keen to get some of your thinking. So let's just dive right into it, Matt. What? 2-3 weeks ago, we were talking about 170K by year end, this major reversal coming. What has changed in the market or in the data to make you pivot so sharply?
So I guess we were seeing, for not just over the past few weeks, but over the past year, really, a huge amount of selling from these long-term experienced, large Bitcoin holders. And of course, that sell pressure was due to potentially crack at some point. We were breaking that dam of $100,000, which had been this big foundational support, this big psychological level where institutional investors were having their passive flows come in and support the market. And beneath that, I'd set a pretty clear line in the sand for a while that beneath $100,000, things start to look pretty poor, not just from an on-chain perspective, not just from a fundamental psychological perspective, but also from a technical as well. We were breaking beneath some key moving averages, that 1 year, 365 day, that 50 week, which is around the same level as well. Once we kind of start breaking through those levels, again, it's just hard to really keep that bullish thesis going. So as I said, I was maybe wrong with my outlooks previously, but I was working on the data, working on the probabilities. I had over a 50% chance of Bitcoin rallying to new highs before the year end. And that turned out to not be true, but I'd always prepared for this downside scenario as well. And now that we've broken beneath that key psychological level, I think the probability of not making new highs is now above 50%. So again, I would love to be proven wrong on this. I'd love to see Bitcoin just absolutely embarrass me once again, break above $100,000, prove all the analysts wrong, and rally to new all-time highs. But right now, just looking at the data, I think we could be in another period of chopping and consolidating and potentially extending into 2026. But as we've alluded to previously, this cycle has been very different. It's not been this kind of nice long slow grind to the upside with more retail capital pouring in, this big exponential rally and a big blow off top to finalize the cycle. It's been a lot of chopping and consolidating and sideways before a big exponential move to the upside, and recently that big exponential move has been to the downside. So it wouldn't surprise me once again to see a little bit more of a long, choppy consolidationary phase for Bitcoin, potentially lasting a few months, just to allow new capital to rotate into the market, allow the macroeconomic environment to settle it a little bit. But ultimately, I think right now we probably need to be a little bit more defensive, just start preserving capital. I mean, ideally, I'd have liked to take and profit a little bit more. I think everyone would have done. And looking at some charts in hindsight, obviously it becomes clear that we were getting close to a market cycle peak. But again, I think right now, rather than immediately aggressively buying the dip, we need to wait for some more macro confirmation that either a cycle low is in, if this is a mini bear cycle, or potentially even a long extending traditional Bitcoin bear market, or if we can really change the trend on a more macro basis, if we can start reclaiming some key levels, start having some new capital pour into the market, start seeing some pivots from the Fed and in macro conditions. And at that point, again, maybe we can start slowly scaling in and expecting higher prices.
Oh my God, man. Okay, it's a significantly different outlook, but you delivered it such a nice soft way, and I like that. So you're telling us to be definitely more conservative with our approach at this point. Maybe a little late for profit taking, but if you think it's going lower, then not, still not the worst idea. Matt, what pivotal point was there in the market that changed your mind? Because you released this video that I'm referencing called the Bitcoin bear market, and it starts with you being quiet, and you have a chart behind you, and you're saying, well, guys, I think that's it, or something like that. I'm paraphrasing. What was the moment or the chart that you saw that changed that for you?
So that was probably the least fun video I've made in a long time. I mean, I was still having some fun with it. I started with a nice little meme intro and everything. But realistically, like I said, that $100,000 level, not just from a psychological, technical, supply and demand, economics, fundamental perspective, but at that point, breaking beneath that, I was fairly certain that Bitcoin would have to overcome a fair amount of upside resistance to really continue that bullish momentum that we'd had. And since releasing that, we immediately dropped about 20%. So again, like I said, it's one of these where I'm never 100% bullish or 100% bearish. I'm trying to kind of plan for all scenarios. And above $100,000, I had an over a 50% probability, at least in my mind, based on the data that we were likely to go higher. And beneath $100,000, I thought the base case was further downside. So as I said, I was looking purely at the data. If I'm trusting my own personal monkey brain, my own emotions and internal biases, I'm thinking 200,000 Bitcoin is still an undervalued level. But of course, I'm an irrational investor. I'm an irrational retail participant. So I know my own limitations. I know my own biases. And like I said, I'm maybe not the most rational investor when it comes to Bitcoin, because it's an asset that I love, and it's an asset that fundamentally I believe is revolutionizing money and technology and is going to be valued considerably higher in the future. But looking as a pure, cold-hearted, rational analyst beneath that $100,000, looking at the data, it just seemed like we had a lot to overcome. And especially given the fact that we had seen a year of Bitcoin diverging and underperforming traditional markets, US equities, commodities, etc., to break beneath that and kind of almost depeg from the stable coin asset that we'd become above $100,000, again, just immediately let me flip my mind. And I know people say, oh, well, you're just flip-flopping, you're changing your bias, but that's one of the most important elements and aspects of being an investor who's in this for the long term. Not only do you have to have an unbelievable amount of patience, because Bitcoin, of course, this cycle has tested that theory and tested that skill of a lot of investors, having these long drawn out periods of frankly boring price action. So you have to remain patient, and you have to be able to change your idea, your biases, your outlook, and future kind of expectations of price action on a dime. And as I said, breaking beneath that $100,000 was that point for me. And at that point, I said, Bitcoin structurally beneath that 1 year moving average historically has marked Bitcoin being in a bear cycle. And I didn't think this time was going to be any different. So like I said, it wasn't the most fun video to make, but I believe now we're actually at a point where I think Bitcoin is very much at a discount, and strategically dollar cost averaging in with a small amount. Like I said, it's very much worth being defensive at this point, not going all in and very aggressive. I think I'd wait for more confirmed trend directional changes or more macro bottom in the price action. But ultimately, Bitcoin is at a discount here, and the difference between accumulating at $80,000 and $75,000 or so, in the long term, isn't really that much. So right now, of course, I'm long-term bullish on the market, but I do think we could still have a little bit more chopping and consolidating around these levels.
What's the bottom?
Straight into it. I like it. I think
if you have charts, let's go to the charts. I don't want to.
Let's go to the charts.
I don't want to reveal the 12th day of Christmas yet on your presentation, so we could bring that up. Okay.
Yeah, let's go straight to it. So
take us the whole story, and you can answer that when you're ready.
Okay, great, because I've got way too many charts and data points. I'm very excited to share here today.
Okay, we will get to what the bottom is. That's the gem at the end of the charts.
I will get there. So first and foremost, just looking at the price section, I'm not sure if I'm allowed to swear on this show, but it doesn't look great is the polite way to put it. If we just look at the 1 month chart on Bitcoin, it's practically been down only. And especially as we film this, we had a little bit of a relief rally. Oh, maybe Bitcoin has bottomed out. We were above $92,000 again, and we're straight back down to about $84,000. Let's be honest, it doesn't look great right here. And a lot of people point to on-chain metrics to say, well, we didn't peak this cycle. We didn't have this big exponential blow off top. We didn't reach these big price levels that historically have marked the Bitcoin market cycle peaks. For example, looking at this price forecast tools, we can see especially this red line here, which is the terminal price, has almost always marked the Bitcoin market cycle peak. And right now it's at above $287,000. We didn't even get close to that. So many people are saying, well, maybe the top isn't in. And of course, that could be the case. But a lot of people are maybe a little frustrated. We didn't see these metrics work. We didn't see Bitcoin rally to these levels. Is on-chain data broken? Is there any point in even paying attention to this data? Well,
Wait.
There's a few
elements.
I have to
interrupt you there. I have to enter. What is the terminal price? What is terminal price?
Great question. So if you just scroll down on any of our charts, you can actually see how these calculations are formulated. But if you go down here, you can see the terminal price, which is the sum of the coin days destroyed divided by the existing supply of Bitcoin at that time, the amount in circulation, and multiplied by 21, which is in reference to the 21 million Bitcoin hard cap for the total circulating supply. So a little bit of an arbitrary metric. And like all Bitcoin forecasting models, like stock to flow, like the power law, which everyone has seemed to love this cycle, all of these are going to break. None of these are going to work indefinitely, and that's always been the case. All models are useful to some extent until they're not. The only way that you can really use this data to its full true potential is to react rather than predict. So a lot of people looking at these models saying on-chain data doesn't work, it's broken. Again, we're maybe looking at past performance, which of course we all know isn't indicative of future returns. But if we look at the on-chain data in its purest form as a way to react rather than predict, we can actually see that it worked fairly well. If we look at something like the value days destroyed, which I think is something we referenced previously in our discussion a few weeks ago, we said that, we haven't actually had a big, massive blow-off peak in this cycle, at least not above $100,000. The first one we had above 73, 74K, of course, marked a little bit of a local top, but we rallied significantly higher than that. And while we did have these secondary and third peaks that kind of aligned with Bitcoin reaching these new all-time highs, we didn't have this big blow-off top that many were anticipating. But again, it's one of these in hindsight. It's obvious. If we look at the raw coin days destroyed value, which is what the value days destroyed is actually based on, the coin days destroyed, which is almost looking at the velocity of Bitcoin transferred. So what this is looking at is, say I held 1 BTC for 100 days before transferring it, that would equal 100 coin days destroyed. Or to equal 100 coin days destroyed with 0.1 BTC, I'd have to hold for 1,000 days. So this is almost weighting transfers by the amount of Bitcoin that is being transferred and the amount of time it's been held. Now, if we look at the coin days destroyed on a 30-day moving average, again, we can see that not only did all of these peaks align almost perfectly with the Bitcoin price cycle peaks of this cycle, pretty much as Bitcoin first surpassed $120,000 was with this coin days destroyed peak. Now, as we've actually seen Bitcoin dip beneath $85,000, around $80,000, I think was the local bottom that we've recently set. We've seen a massive spike in this coin days destroyed metric, which looks very similar actually to what we see at typical bear cycle lows as well. Because of course, we all like to look to these long-term, large, experienced Bitcoin holders as these market gurus who always take profit at the tops and always buy at the market cycle bottoms. But realistically, they're also prone to capitulation as well, like we could see in the 2022 market cycle bottom. So as I said, I do think here is actually a fairly good area to accumulate, but looking at these peaks as well, in hindsight, it's obvious, but these also did mark a good area to actually begin scaling out of your Bitcoin positions and mark the Bitcoin market cycle peaks. But another thing quickly just to kind of take into consideration is, of course, when we're measuring Bitcoin versus the US dollar, we can see very clear and obviously that October 6th, about $126,000 was the market cycle peak. But realistically, when you're looking at Bitcoin priced in an asset like gold to measure its true purchasing power, we actually topped in December of 2024. We've almost been in a year-long bear market when measuring Bitcoin versus comparable assets to see, like I said, its true purchasing power, not just measuring against a debasing fiat currency. So at this point, if Bitcoin is following something like a 4-year cycle, we've already been in a 1-year bear market essentially. So I think now aligning with some other points, which we'll get onto a little bit later, as I said, I think Bitcoin right here is at a fairly good discounted area. Maybe we go $5, $10, $15,000 lower. But ultimately, I think right now we've all endured this pain for a year-long bear market. We've all felt the pain of not calling the Bitcoin market cycle peak, not taking profit at the absolute peak or top, which of course we were all going to do without exception. But as I said, I think looking at the data now, it's time to be reactive rather than predictive. I think Bitcoin could potentially be at a turning point. And if our last episode discussion is anything to go by, we can time these market turning points with precision. We marked pretty much the cycle peak. So I'm hoping right now we can actually mark some bear cycle lows with this episode as well.
Bitcoin changed the investment game. Now AI changes the strategy. Crypto's wild ride demands perfect timing, selling before drops, buying as it climbs. While most investors panic, sell, or hope, a select few leverage a crucial edge: AI. Blocktrust IRA's trading platform spots market patterns with precision no human can match. Since 2020, their Animus AI platform has outperformed Bitcoin by over 250%. Visit milkroad.com/blocktrust today to get up to $2,500 in bonus crypto and transform your investment strategy. ETFs provide investors with a structured, disciplined, and diversified approach to crypto, which is cool, but the world is moving on-chain. We need a crypto-native equivalent. That's exactly what Reserve's decentralized token folios, DTFs, bring to the table. Reserve DTFs are rule-based baskets of crypto assets packaged into a single token, like CoinMarket's CMC20, crypto's version of the S&P 500. Go to milkroad.com/reserve to find out what's on offer. Dude, I love this. Dude, this is such a good way to look at it. I love the spin of we've been in a 1-year bear market since the 2024 peak. Yes, Matt. That's what I want to hear. I want to hear a new narrative on this, that it's like we've actually already started the bear and we're going to be near the bottom of that bear soon and we'll be back up. I love that. And I was going to mention that when you were talking about we haven't seen a blow off top. To me, and without even looking at the chart, just thinking of the last 2 years, the time that felt the most rocket ship was from the day of the election when it became clearer and clearer that Trump was going to win, and you had this, or even like 24 hours before, it was like goom, 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 started just crushing these levels through to that inauguration peak or just before it. That was like that was the only time I'd say in the last 2 years that I felt that same energy from the last cycle where it was like, wow, this is crazy. But it's funny how I didn't feel it as much in the summer. And even though we had a higher top in October, we didn't feel that. So it's interesting to hear you say that you are arguing that compared to gold, that the peak was in December 2024. I think that's really fascinating. And I guess that's also largely based on gold's value, which has skyrocketed since then.
Yeah, of course. And this isn't just restrictive to Bitcoin versus gold. If you look at Bitcoin versus US equities, for example, the NASDAQ or the S&P, we can see very similar patterns and trends in Bitcoin's recent underperformance, which I think is why this Bitcoin bull market felt pretty poor. I mean, realistically, from bottom to top, it was around a 700% return, which, compared to other markets, just blows them out of the water. Bitcoin still has this potential to massively outperform. But over the past year, seeing Bitcoin stagnate while everything else rallied to new highs just made it feel all that worse. It really felt like Bitcoin was underperforming where it really felt like it should be. But another metric we can look towards is to maybe give us some indication of why Bitcoin has been struggling over the past year is if we look at the actual realized profit within the market. So this is the spend output profit ratio. So this is looking at the price of Bitcoin at a UTXO, so when it was last transferred, and then the profit or loss from the next transfer of that UTXO. So what we can see is when this is massively spiking to the downside with these red values, it indicates genuine realized capitulation in the market. People are selling Bitcoin at a loss. Now, if you look to the big greenwood spikes, what we can see is people, again, tend to realize some profit as Bitcoin is peaking, and this provides some sell pressure. And again, just from a supply and demand economics perspective, if that supply of Bitcoin hitting the open market isn't matched by demand of new users buying Bitcoin, then again, this provides some sell side pressure that can't be sustained forever. And if we average this out, because if we just look at the raw data, it can get a little bit confusing. There's anomalous data points and it can be a little bit messy. But if we average this out over a 28-day period, what we can see is the monthly average profit taking on Bitcoin, again, marks the exact cycle peaks throughout this entire Bitcoin market at a very similar level to what we saw near the Bitcoin cycle peak in the previous bull market. So again, there's many data points which still point towards Bitcoin having peaked throughout the previous cycle. Of course, in hindsight, like I said, it's easy to say, well, we should have reacted to this data point and that data point, etc. But I don't think it's something to point towards the on-chain data and say it doesn't work anymore, or point towards Bitcoin breaking the 4-year cycle and say, no, nothing can be predicted anymore. We're all just guessing, it's all in the dark, etc. Of course, Bitcoin is changing and evolving. We can see the institutional influence growing and changing the dynamics of the market. But ultimately, the thing that's moved in Bitcoin price action, supply and demand economics, can still be tracked better than ever before, and is still very much useful data to look towards, especially now if we're starting to look through a slightly different lens in how we're actually valuing Bitcoin, looking at its valuations and ratios compared to comparable assets like gold, silver, US equities. At that point when we can see not just its USD performance, but its relative purchasing power performance, then I think this gives us some good insights on how we can maybe better predict and react to Bitcoin's data going forward.
How has this changed for you in the last month looking at these charts? Like what changed? Was it only that 100K level, or is there something else? Because I feel like you're right. We're circling back on some of the same data points that we saw a few weeks ago. So I'm just trying to understand how the outlook has changed versus the charts showing somewhat the same.
So good question. And I'll be honest, at some point, some bullish biases may have swept me up. But realistically, seeing Bitcoin endure this amount of profit taking and still remain above $100,000 did give me some confidence that maybe this time was a little bit different. Maybe Bitcoin was having this IPO moment where we're seeing a distribution from OGs and a huge concentration of Bitcoin held in these individual wallets to new institutional investors and passive flows. I mean, if we look at the ETF cumulative flows, everyone's been complaining and looking at the ETFs having these huge outflows, billions of dollars of Bitcoin being sold, institutional investors capitulating, and the sell side pressure is just going to be a monumental downward spiral influence on the Bitcoin price action. But if we look at the cumulative amount of Bitcoin being held by these ETFs, which peaked at about 1.27 million, they've really only offloaded about 5% of their Bitcoin, even in spite of this recent dip. So I guess looking at the institutional influence, seeing all of these capital inflows, looking at treasury companies buying hundreds of billions of dollars of Bitcoin, this kind of gave us an equilibrium in the price action where maybe it seemed at the time a little bit more sustainable, where even though we were seeing this monumental amount of profit taking, it was being absorbed by institutional participants that Bitcoin had never really experienced before. When you're seeing genuinely tens of billions of dollars coming into the market every week, every month, this gives a huge amount of buy pressure and support, which of course resulted in some boring price action because we were, like I said, at an equilibrium with Bitcoin being sold by these OGs and these large individual holders into the hands of these new long-term buyers who may not be taking profit on substantial amount of Bitcoin for years or even decades. So the fact that we were holding above $100,000 in spite of all of this profit taking, again, in hindsight, it's obvious to say that this profit taking couldn't have been sustained forever, but I thought maybe it could be, at least while we were above $100,000, sustained a little bit longer. But beneath that 100K level, like I said, that psychological, technical, fundamental point, it was really hard to actually maintain this thesis that this institutional capital could sustain Bitcoin's move substantially higher. And along with that, like I said, we've actually seen some outflows alongside this, although very minimal compared to what people are saying, catastrophize the amount of institutional outflows that we're actually seeing. If anything, again, it's pretty positive to see that Bitcoin, even though we have had this big drawdown, isn't really being offloaded at the rate that we maybe anticipated by these institutional holders. And this is why I think this bear market that we're in isn't necessarily going to be like a traditional Bitcoin bear market that we've seen. Of course, pricing gold and US equities, it may look a little bit worse, but in its USD valuation, we're down, 30, 40% or so? Compared to traditional Bitcoin bear markets of 60, 70, 80 plus percent, this is actually fairly minimal. This is actually a level of Bitcoin pullback that we'd see during previous bull markets. And we're now talking about Bitcoin potentially being at a turning point and a pivotal point to accumulate some discounted BTC at a fairly minimal drawdown percentage. So while the upside was muted, and while we did have this long distribution phase and not have this big blow off top, that leads me to believe that maybe the bear market's going to be something similar. The bull market usually paints the picture of what the bear market will look like. And given the fact that this bull market didn't play out like many were anticipating, expecting, and really hoping for, I think this Bitcoin bear market is going to play out something similar, where it's just going to be a long, drawn-out accumulation phase without as much volatility to the downside. And again, just allows more capital to rotate into it from institutional investors to allow Bitcoin to become more distributed and hopefully just start this slow grind back to the upside, which again, for retail participants is a little bit more boring, but actually is a lot more sustainable for the coming years of Bitcoin price action, rather than these big blow-off tops, rather than these huge, long, drawn-out 80% plus bear markets. Bitcoin's just having these step up and recently down in price action, which again, I think is a lot more sustainable and allows institutional investors to feel a lot more comfortable rotating more and more money into the asset class.
And before we talk targets, here's the alpha. The market is evolving, as you guys know, and we are too. Milk Road AI is launching very soon, and it's going to change, I think, how we invest and probably how you invest too. If you want early access and want to make sure that you lock in Pro for AI, our Black Friday deal is on until midnight tonight. You get 40% off the All Access Pass, which is crypto, macro, and AI, which is launching again very soon. So make sure you future-proof your portfolio for pennies on the dollar. The link to that is in the show notes. We'd love to have you in there also because you get the Discord chat, and I'm in there, so make sure you join. What next level would give you concern again?
So, as I said, I don't necessarily think that we're exactly at the Bitcoin bear market bottom. We could have a few K to the downside. Traditionally, Bitcoin actually bottoms out at the realized price, which is the average accumulation price of all Bitcoin on the network. Now, this is actually substantially lower than the prices we're currently at. This is currently set at around $56,000. So, to say we won't hit that is to say that this time is different, to say that Bitcoin is going to behave entirely differently than it always historically has done. I mean, this is blood in the streets, buying when there's blood in the streets in real time. When you can see the average investor, and this is including people that were buying Bitcoin for a fraction of a dollar over a decade ago, when the average investor of all Bitcoin in the network is at a loss, traditionally this marks Bitcoin bear market bottoms. And this aligns, again, pretty nicely with another metric, a more market cycle technical level, the 200 weekly moving average, which again has historically marked Bitcoin bear cycle bottoms, also at $56,000. So both of these are providing some confluence. So I think right now, where Bitcoin is around $80,000, I think could be a good area to accumulate some discounted BTC. But if we look to MicroStrategy, again, big talking point at the minute. MSTR, are they going to capitulate? Are they going to start offloading Bitcoin? If we scroll down, we can see that their average BTC cost basis is around $74,000. I think this is a really good target to be looking at, because imagine the headlines when MicroStrategy are at a loss on their position. Everyone's going to be capitulating. It's going to be making all the headlines. You know, they've invested billions of dollars into this asset and are now at a loss on their position. I think at that point, we'll have this huge narrative shift that Bitcoin has died another death. And Bitcoin really is going to head to new lows, and it's just going to break everything to the downside. So I think around this $74,000, $75,000 level is a really good area to potentially consider start accumulating Bitcoin. But again, we need to react, not predict. These are all more theoretical price levels. What I'm going to be looking towards is some genuine market points. So if we see some extreme fear in the market, like we already are doing, if we start to see a huge amount of shorting on the Bitcoin derivatives market, which at the minute we're actually not seeing, which leads me to believe we could have a little bit lower to go. But once we start seeing all of these signs, it's almost like a jigsaw. Once we start seeing a huge amount of ETF capitulation and outflows, once we see derivative markets really start shorting Bitcoin, people realizing losses on their positions, was it this chart here? The spend output profit ratio is still pretty much positive. Ideally, to mark these local lows or major bear cycle lows, we see a huge amount of Bitcoin being offloaded at a loss. Once we start seeing these pieces put together, whether that's at $74,000 or whether it's all the way down at 56, maybe at that point in time it's $60,000, whenever that is, it's time to react rather than predict. So what we need to do is look for confluence throughout not just technical factors, derivative factors, macroeconomic factors as well. Once all of these start acting like a bear cycle low is in, or maybe we've had a more macro directional trend change and we need to start being more bullish on Bitcoin, then that's the point to really start taking some action. At the minute, this is still all theoretical, but for me, the big lines I'm currently watching around that $75,000 level, which also aligns pretty nicely with where our current yearly lows are set around $76,000. And beneath that, considering the realized price and 200 weekly moving average are still trending to the upside, probably around 60K, which again aligns pretty nicely with this big consolidation range that we set in 2023 and 2024, where I think Bitcoin, again, could maybe find some buy pressure and support, especially considering the fact that it coincides pretty nicely with the previous cycle peak. So there's a few levels to be watching here. As I said, it's definitely still worth being defensive rather than aggressively accumulating at these prices, but also looking at the different market dynamics that we're seeing. I think around this $75,000 to $80,000 region, given the fact that we're seeing a fair amount of capitulation in the market as well, just looking at something like the Coinbase destroyed, could be a good area to slowly start considering scaling into the market.
Matt, if we go to 55K, how would you ever convince people to smash the buy button? Because from here, that's how much of that's another, what, 40%, right? Like a 30, 40%. How would people, how could you possibly ever show that chart and be like, listen, we're down to the average buy. This is where it never goes below that. It's time to scoop it up. How would you ever convince people to do that?
Good question. Maybe in a year's time we can have this conversation and I can show you how I'm trying to convince people to do that.
No.
No. As I said, I certainly hope that isn't the case. I'd love to be proven wrong and see Bitcoin just rally beyond expectations. But this is fairly normal for Bitcoin, and especially if we do see a little bit of a drawback and potentially even recession and more drawn out pullback in equity markets, Bitcoin is going to struggle. But all things are cyclical. Price action recovers. We can see, looking at the data, that Bitcoin, when it is at a capitulation phase and region, when the average investor is at a loss on their positions, historically, this has been a great area to accumulate Bitcoin. And it becomes more of a question of, are you a long-term believer in Bitcoin's potential? Do you think it has the right to be this digital gold, fulfill that narrative and become a world reserve asset and base layer of monetary transactions through nation states? At that point, buying Bitcoin at a 70% drawdown, it seems like a no-brainer. It's going against your own intuition. It's going against your own emotions and biases. And that's very difficult to do. But that's why these data points give us some relief, give us some ideas that Bitcoin is at a point of discount or overvaluation. So while it would be incredibly, incredibly difficult, and pretty much everyone in the space would just be at genuine capitulation levels, at that point is when I'm going to be very aggressively buying, acting as a contrarian, doing what the vast majority of people are very afraid to do. And at that point, let's be right, I'm going to be very afraid. I'm not going to be feeling great to see my investments down considerably. Bitcoin at $56,000, it's going to feel terrible. But this is where, looking at the data, focusing on the metrics that historically have been proven to work incredibly well, and especially if we get some confluence from huge derivative market shorting, huge capitulation in the spend output profit ratio, and all of these aligning with a bear cycle low, at that point, the probabilities in my mind that Bitcoin is more likely to go higher than lower exceed 51%. I start getting incredibly bullish at those levels. Now, of course, we did mention that Bitcoin could find a bear cycle low. We were looking at price actions, which I kind of alluded to previously, but we've maybe covered that now. But as I said, we need to work in probabilities. Bitcoin at this point in time could have set a low. We could be ready and primed to move substantially higher. So maybe the top calling metrics didn't work because they haven't had the opportunity to really call the cycle peak yet. I mean, a lot of people are looking at the global M2 liquidity chart this cycle to maybe track Bitcoin's price movements. And we were definitely doing the same, looking at the historical correlation between these two data points. It was hard to really ignore. But one thing that I've really seen people looking towards is the US PMI, the Purchasing Managers Index, to try and get some insight onto the business cycle and how this is influencing the Bitcoin price action. Because if we look at the manufacturing PMI, we can see a clear and obvious correlation, but Bitcoin's still a relatively new and small asset class. So what I did is do this type of analysis on a different market, the S&P 500. So the red line we see on the bottom here is the 12-month returns of the S&P 500, and the green line is this US PMI. So what we can see is recently we have actually seen a divergence where maybe Bitcoin hasn't been underperforming what it really should have been. Maybe US equities and commodities have been overperforming what they really should have been, because just looking at this US PMI, the business cycle, it's actually been negative and very much in a almost recessionary period for a long, long time. Now, the correlation between these two lines is obviously clear to see. One thing that we can also see, though, is if we look at potentially how this may play out, looking at the relationship between copper and gold, which gives us some indications on where the business cycle may be going. There's not really a clear and obvious indication that this trend could be about to change. We could be about to see the US PMI really start trending to the upside. We maybe haven't seen the indications of that just yet. But today, as we film this December 1st, the Fed have announced they're ending quantitative tightening. We can see the federal balance sheet has been in a period of contraction for many, many years now. And that ends today. We're maybe not on the verge of quantitative easing, but the fact that this is potentially going to start flatlining and ending is a pretty good sign for us. If we look at the previous instances where this has happened, we can see in 2010, just prior to a huge Bitcoin bull market rally. Back here in 2012, just before the double peak cycle that we had in Bitcoin. And then here as well in 2019, which is actually just before the Bitcoin COVID crash, the big dump we had in 2022. But following that, we had almost a 20x in price action from just over $3,000 to well above $60,000 in just about a year or two following that. So again, there are some macroeconomic factors that point towards Bitcoin potentially being on the cusp of this transitionary period where this cycle, which has broken the 4-year cycle thesis, potentially if we are seeing an extending cycle, broken the traditional expectations given the divergence that we've seen between equities and commodities. But now, given the fact everyone was anticipating a big bullish Q4, which myself included, and now everyone's anticipating a very bearish 2026, maybe we were all going to be wrong on both instances. Maybe we're seeing this bearish Q4 of 2025 play out, and everyone expecting a big recessionary drawdown 2026, maybe they're going to be wrong as well. Because when in investing is everyone right? When is the average investor calling the shots with true 100% accuracy? So as I said, it feels like a cop-out answer to say, well, we could go down, we could go sideways. But right now is a very interesting point in Bitcoin. There's no clear and obvious direction. As I said, I still think it's very much worth being defensive with our investments and analysis. But there are some theses and some outlooks that do point towards some more positive price action in the not too distant future.
Sure, tokenized financial products are the future, but there is a big sticking point. They all need to speak to each other. This is a tough problem to solve, but Chainlink does exactly that. It's the universal language for financial markets, linking Wall Street to Web3, banks to blockchain, and so much more. See how Chainlink is linking the world by going to milkroad.com/Chainlink.
Matt, if the best case scenario plays out, we dip to, let's say, 76 to MicroStrategy's buy price, and 2026 just starts on a roll. We go back up, smash 100K, smash the all-time high, go to 150. People will be euphoric, right, from here. What would you name this current dip? Because in April, we had the tariffs. What would you call this?
Good question. I'm not very creative or imaginative when it comes to names, but I mean, this has almost been caused by tariffs 2.0. I mean, there's the instances going on in the Japanese economy where the Bank of Japan have been doing some crazy things with rates, which has caused some uncertainty in the market. And definitely this most recent sell-off has been influenced by that recent change and alteration that we've seen in macroeconomic policy there. But in terms of the name of this dip, I don't know. It feels like everything that could go wrong has gone wrong in the past few weeks when it just looking at the headlines and the politics of the geopolitical state of the world. It's a very interesting time. And I mean, everyone's kind of been expecting this big global recession for what seems like an eternity now, because there definitely has been a divergence between living standards, the prices of goods and services around the world, the wealth inequality that we're seeing. It almost feels like an inevitability at this point to have this big recession, but I feel like Michael Burry calling a recession that never comes. And then at some point, I feel everyone's going to say, you know what, maybe we can have this soft landing. Maybe we can slowly pivot our way and maybe we aren't going to see this. And at that point, probably the recession comes. So it's a very difficult time. Like I said, I don't really have any expectations or ideas of what we would call this in hindsight, but just looking at the basic coin price action we've had in this cycle so far, we've had multiple instances of 30% retracements and 6+ months of sideways chopping and consolidation of price action. If we're to do the same now, it wouldn't really be too surprising. But how about yourself? What would you kind of relate this to? What would you call this narrative of the Bitcoin price dip?
I don't know. I mean, I think right now we still refer to it as since 1010, since October 10th, because that's the thing. I still a lot of people are like, we will one day find out what happened. Even though there's all the, maybe Binance, market makers, blah, blah, blah. We still don't know, right? And maybe there'll be eventually a reason and we'll call it that. But I don't know. I think it really depends how it ends, right? Because I think for the tariff dip, I don't think the tariff dip was necessarily the tariff dip at first. It was the inauguration peak. And then you had 2.5 months of just chop down action. And then it was like that bottom was that liberation day. So I think dips maybe get defined more by their bottom than their top. And maybe the fact that we do not yet have a name for this means the bottom hasn't hit. So we need some black swan bottom event that's definitely the bottom. Sentiment can't get worse. And then we peep back up. I don't know what that's going to be. I hope it doesn't happen. But thinking FTX, all that stuff, those is where the usually the dip has a name at the bottom rather than the top, right? So we never know when we're in the good times while we're in them. And we never know we're at the top when it's the top, right? Okay. 2 more questions for you, Matt. What are you doing right now? What is your play right now at this point where you have 2 vastly different scenarios for the future?
Waiting. I mean, it's boring and it's difficult to make content when there's not a real lot that I'm doing in the market. But genuinely, like I said, 2 of the most important, if not the most important skills for an investor and analyst in the space is being able to shift your mindset very quickly, unemotionally, look at the data and come to a logical conclusion of where you think the market could go, working in probabilities. And second is to just have a lot of patience. These things, unfortunately, take a lot longer than we'd ideally like them to. And if this cycle has taught us anything, is that Bitcoin can be really boring for a really long period of time. This cycle hasn't had these big euphoric blow-off moves that have lasted many, many months and these big retail FOMO influxes of capital. And I think the bear market could play out fairly similar, like I said, unless we see some treasury company implosions, which, I mean, there's murmurs happening, especially if we're seeing net asset value premiums beneath 1. I mean, we've seen MSTR now create a USD reserve to pay off investors, which has kind of ended some of the FUD there, but especially some of the later to the party treasury companies who are taking out excessive debt and leverage. I mean, when has taking out excessive leverage ever worked for anyone over a sustained and prolonged period of time? So it wouldn't surprise me to see some big implosions over in that space as well. But like I said, right now, I think the best thing to do is keep it simple. Sit on your hands, enjoy the festive period. I'm in the US. I've had Thanksgiving for the first time. I don't even know what Thanksgiving is yet, but it was nice to have some Christmas turkey, some Thanksgiving turkey and all the trimmings, etc. But right now, I'm just analyzing. I'm waiting to see what happens. There's FUD happening with the USDT right now, which usually signifies market cycle lows when everyone starts calling for Tether to implode. It never happens. Maybe this time it will happen. Who knows? But I'm just sitting and waiting till the opportunity, waiting till the data points to some more clear and obvious things. We're getting some conflicting data and information at the minute. Some charts are obviously pointing bullish. If we look at the narratives of macroeconomic conditions, some of them are slowly pivoting into more favorable conditions. We can see gold beginning to rally once again. Is Bitcoin just lagging behind that? And we're going to start to see a rotation of capital from those markets into more speculative markets like Bitcoin, especially considering it's at a bit of a discount and we're not seeing a huge amount of percentage outflows from the ETFs. Is that going to give some investor confidence? We have to wait and see. And it's very boring. And as I said, it feels like a little bit of a cop-out answer. But right now, just keep it easy, keep it simple. I'm not aggressively accumulating. I'm not checking the charts every hour of the day, drawing 1,000 lines on an hour in different moving averages, etc. I'm waiting for the market to come to the levels where I see a huge amount of discounted value, or to start changing the trend, start proving people wrong, reclaiming some key levels, reclaiming some key moving averages, some short-term holder realized prices, some psychological boundaries at $100,000, etc. And at that point, start taking some action. But right now, and it's counterintuitive to most business models within the cryptocurrency and Bitcoin space to say, now's not the best time to be, spending all your time in the market. But right now, it really isn't. Just enjoy life. Not everything revolves around looking at Bitcoin markets and data. Even though I enjoy doing this, it's a genuine hobby to me that I enjoy doing. For the average investor, just wait until the market comes to you, set some price alerts, set some data alerts on some favorite indicators of yours, and just allow the market to play out in the way it usually does, which takes a lot longer than we'd like it to.
That's a nice way to end. Go enjoy your time, enjoy your family, and tune into Milk Road every day as well. You hear very
Excluding the
smart
Milk
people like
Road
Matt to speak. Yeah.
and Bitcoin Magazine Pro. This is probably the worst sales pitch anyone's ever done. But of course, we have a Cyber Monday deal. If you'd like to get access to those indicator alerts, etc., 40% off, all that good stuff, industry reports and everything. This is the thing. I'm still going to be doing this. The guys at Milk Road, who make the second best content on the internet, I would say, but I'm a little bit biased. They are putting out some great content as well. So outside of us too, you can maybe tone it down a little bit, but our great content definitely continue to appreciate and acknowledge. And the thing is, at some point, the market is going to change. At some point, there is going to be a huge amount of discounted BTC to be accumulated at great value, or at some point, the tides are going to turn. And you don't want to be late to the party. You don't want to see Bitcoin rally to $110,000 before you had a chance to react. And you don't want to see the market wick to $60,000 and think everything's truly over when the data is telling you to do the opposite. So this is the thing. It's waiting, it's sidelined, it's being strategic and patient with our investments and analysis. And at some point, when the time comes to strike, we're going to be ready to do so.
I love that. Listen, if 40% off Milk Road Pro, 40% off Bitcoin Magazine Pro, that's 80%, right? That's how math works. 80% the subscriptions. Matt, you've been wonderful as usual. We have another episode lined up with you very soon to talk 2026 actual predictions. So you guys look out for that during the break. Otherwise, check out Bitcoin Magazine Pro with Matt Crosby. Sir, thank you again for your thoughts.
Always a pleasure. And looking forward to the 2026 prediction episode. I'm going to have to be a little bit more cemented in my own personal views and outlooks. At the minute, I'm just kind of saying if, buts and maybes, but come that prediction video, I'm going to be on it. I'm going to tell you exactly my thoughts and everything. I mean, very quickly, just one last thing, just as a little bit of a teaser, if we can share my screen. Yeah. This is part of a recent analysis piece that I've done because, again, we like to work in probabilities. And this is kind of my personal thesis of how I could see the next few months playing out. Because, of course, we need to acknowledge that some charts are pointing bullish and a bullish rebound could be on the cards. Many charts are pointing a little bit more bearish. And we could see Bitcoin not already a majority of the way through its bear cycle when we're pricing it in gold, for example. Maybe we could see a 1-year drawdown period from that peak we set on October the 6th. My current base case is actually somewhere in the middle. Like I said, Bitcoin has underwhelmed to the upside, and I think it's going to underwhelm to the downside. We could almost have this mini bear market lasting a little bit less time and with a little bit less drawdown than we historically have seen. But again, we'll cover this very much more in depth in our 2026 prediction video. I just thought I'd give this as a little teaser.
Thank you, sir. That's great. I love. I always forget that this is the crux of the episode when you come on. Is you have to show us this chart, your current outlook, and I'm very keen to see that, see what it looks like even in a couple weeks. Thank you, Matt.
Always a pleasure. Thank you very much for having me.
If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.